Hello everyone, this is Kathy. If you can hear my voice and see my screen, please let me know in the Ask Kathy room. Let me know that everything is working well. I am not in my office, I'm traveling, so I don't know if everything is as spiffy as it should. So please say hello. Please let me know if you can hear my voice, see my face, and see my screen. Thank you so much, Lewis. I am so glad that everything is working the way it should. And the stream seems good and stable here. Just say, I have my friends in our BK room letting me know that everything is working properly. Okay, thank you, Dory. Thank you, Donald. Thank you, Andrew. Okay, thank you, Cheryl. So yes, it looks like everything is coming through properly and showing exactly what I want. Hello, Jason from Singapore. Good morning. For me, everyone, I'm actually right now sitting in California, and every single time I'm in the West Coast, I wonder how you all do it because right now it's 5:45 a.m., which is not so bad. I'm on my second cup of coffee already, but tomorrow I'm going to be trading at 6:30 a.m. So that's going to be 3:30, and that will be a lot of fun. We'll see how it goes. Um, but good morning, everyone, and welcome. It is certainly a very, very busy week, busy month in the markets. I am so glad all of you are here so that we can talk about all of it because July is, there's so much going on in July. And this week in particular, there's so much going on. I think we really, really need to talk about it, especially since dollar yen is trading above 161, fresh 38-year high. There's much to talk about on that front. But let's start by talking about the US dollar and how this may be a shortened week for the US dollar, but there's a lot going on. Actually, you know what? I want to take a step back. I want to take a step back and talk about July as a month as a whole. I mean, this month we have the Olympics, so that's definitely going to re-energize um, the French economy. And there's, new governments in place for France. Now, you may notice that the euro is trading higher after the French elections. There's a gap higher after the French elections. We'll look at the charts because gaps always like to be filled, right? So there was a gap higher after the French elections. We have a new French government. We're going to have a new UK government when they go for votes on July 4th. We have the BOJ meeting, Bank of Japan meeting later this month, and it's going to be very, very important because we're walking into the Bank of Japan meeting with the yen at its weakest level in 38 years. So there's a good chance that in the month of July, the Bank of Japan could raise interest rates. They'll probably will raise interest rates and also reduce JGB purchases. They really need that 1-2 punch to stand any chance of reversing the slide in the yen. We'll talk about why in this latest development, the yen has continued to push lower, which will be fantastic because next week I'll be in Japan and I'm really going to be basking in this weekend, and I'm looking forward to reporting to you, especially on what will surely be strong consumer spending all around. This month we also have the Chinese Plenum. What in the world is the Chinese Plenum? The Chinese Plenum is usually this huge meeting that they have after they install or reinstall the government. And it is historically the third plenum is historically one of those meetings where we can get a huge economic announcement. And I mean, none of you remember. I barely remember. I had to read this. But in 1978, Deng Xiaoping announced his huge major economic reforms at the third plenum. And it is widely believed that this time around, the third plenum goes from July 15th to July 18th. It is widely believed that at this plenum, they're going to announce huge economic reforms because whatever they're doing is not really working. China's economy is slowing. They really got to take measures to support the housing market. So Towards the middle of the month, we could have some big announcements on fiscal stimulus, and they certainly need it from China. And this fiscal stimulus should impact the Australian dollar, the New Zealand dollar, and possibly even the Japanese yen. Also, July is traditionally one of the strongest months for stocks, and I'll try to pull up some charts for you. But July, actually, let me see if I can find them. Hold on one second. Let me see if I can find the charts that I want to show you. It is historically one of the strongest months for stocks. And so, we've been talking a lot about sell in May, go away, does this really work? And hold on, I'm going to show you this. Where is here? Okay, you should now see my image here. This is seasonal patterns in US stocks from going back to 1985 and going back to 2005. And straight in the middle, July, strongest month for stocks of the entire year since 2005. And in the last 16 years, I don't have the bar chart and I don't have the time to make the bar chart, but I will tell you, in the last 16 years, the NASDAQ rose 16 out of the last 16 years. Not everyone believes in seasonality, but you can't ignore such a huge seasonal pattern. I mean, 16 out of the last 16 years is pretty much 100%. I'm not saying it's going to happen again, but the odds are certainly in favor of it. And also US stocks in general performing well. So what does that mean? Of course, if you're trading NASDAQ with Boris, you're trading ES with Boris, there's probably going to be a bias to the long side. If you're trading currencies with me, that means that, the risk on trade could still thrive. And one of the reasons why dollar yen has been so strong is because equity markets have been so strong. And I've said, time and again, and I'll say it again here today, that one of the primary catalysts for a reversal, for a sell-off in stocks, in dollar yen, and a top in dollar yen is going to be a reversal in stocks. And if we go back to that image that I just showed you, you will see that yes, July is a great month for stocks, but August and September are the worst months for stocks. So maybe, we'll have to hold out until August and September for that top in dollar yen. But to be a little bit more specific, it's really the first 2 months of the year first 2 weeks of the month that is good for stocks. That's exceptionally good for stocks. So after the Bank of Japan meeting, we could actually get a situation where we start to see stocks fall, which could lead to the sell-off in dollar yen. And dollar yen, as you know, is trading at its strongest level. And if we pop on a dollar yen chart here, dollar yen is trading at its strongest level in 38 years. I mean, what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I lost my count. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days with no meaningful correction in dollar yen. And, basically, no meaningful correction in dollar yen. We had one pullback, modest pullback at that, no big move. And, it's driven by a few things. Number one, it's driven by the revival in US yields. I mean, look at this, my right-hand side. US Treasury yields are up almost 1% this morning. The Fed is still one of the least dovish central banks. And we don't have a sharp sell-off in stocks. Stock futures are up today, although modestly so, and they're down from where they were earlier. Dow futures were up 100 points, now we're only up 50 points. But there's no, right now we don't see a real reason for a collapse in stocks this month. And so until we get evidence of all that, dollar yen, the pressure is going to remain to the upside in dollar yen, because also the Japanese government are not stepping in. They had their opportunity in June to cut JGB purchases. They had their opportunity in June to intervene. They had their opportunity in June to shock the markets with a surprise interest rate a hike. Did it happen? No. And because of that, dollar yen continues to press higher. And I actually just published a video on X. Actually, this is a video I published last week, outlining where the next level of resistance is. And I encourage you to watch the video, because I show you the fib levels, I show you where I draw that from. But the bottom line is, it's 165, it's 168, which is a very important fib retracement in dollar yen. And then it's 170. So it's not going to be a free direction to 170, because the real Fibonacci resistance level going very far back is at 168. And those of you that are joining us late, we're talking about how July is a very big month in the markets. We have the Olympics, we have the new government for the UK, we have a new government in France, we have the Bank of Japan hike and JGB cuts possibly coming this month. We have the China Plenum, which could lead to new stimulus from the Chinese government. And then we also have the stock market generally performing very, very well. Sorry about that. Generally performing very, very well for the month of July. Boris, I know you're in the room. While I'm chatting, do you mind pulling up, Boris is going to be live trading non-farm payrolls on Friday. And this gives us an opportunity to now shift gears to talk about what is expected this week. So Boris, if you can grab the non-farm payrolls link and pop it into the chat room, that would be great. Otherwise, I will share it with you later. So this is a huge week in the markets. Even though it is a shortened week, meaning that US traders are off on Thursday for July 4th, and most of them are gone on Friday as well. We have a lot going on. We have Powell speaking. Powell is speaking at the ECB Central Bank Conference in Sintra, Portugal. The topic is monetary policy. So it's very, very topical. And it's topical at a time when the market is still very much decided on what's next for monetary policy. Is the Federal Reserve really going to commit to just one interest rate cut this year, or are they kind of flexible in thinking about 2 interest rate cuts? There's a good possibility that maybe he could reveal something at such a topical conference. I mean, if it was just on like central bank structure, that'd be less important. But this is on the central bank. This is on the central bank policy itself, which means that is definitely very market moving. And then secondly, we have the Fed minutes, and the Fed minutes, if you remember, the Federal Reserve basically indicated at the last Fed meeting that the dot plot is showing one interest rate cut. So this is the Fed minutes that will tell us how much of a consensus is this for everyone else. Does everyone else kind of feel the same way, or is there more division? So the Fed minutes this week is going to be very important. And then, of course, it's going to be non-farm payrolls on Friday. Non-farm payrolls is very, very important. And we're going to be live trading this with you. Boris has popped in the link into the YouTube live stream. BK members will be adding it to the Discord. There will be a big focus this Friday, because the labor market is the only part of the economy that is really supporting all of the rallies, supporting the dollar strength. And we are beginning to see, weakness everywhere else in retail sales, inflation, and activity. So if non-farm payrolls comes in subpar, and it is expected to come in lower than the previous month, then we could very much be in trouble. And the 4-week jobless claims, which is an important leading indicator for non-farm payrolls, is at its highest level since September. So there is a chance for a downside surprise in NFPs. We also have ISM manufacturing and services this week. We have ADP, we have Challenger Gray and Christmas, a lot of labor market indicators. This makes Non-farm payrolls on Friday, even more important. And on top of that, many US traders are out. And so the lower participation, lower volume could lead to more exaggerated moves. So definitely join us for live trading NFPs starting this Friday at 8:15. Boris has dropped in the link, and it's completely open to everyone. So make sure you just bookmark that link and join the live trading NFP session. So that's why we are neutral dollars. We're neutral dollars because there's so much going on, and we really have to see how do these different pieces play out. I am still bearish euros. If we look back at the charts, you can see euro dollar is trading higher. I'm going to get rid of, actually, no, let's keep the indicators open. But what you will see, let's see if we can find this on the, I guess you can kind of see it on the 5-minute charts, but euro dollar basically, here it is, gapped. I think it's better on the 1-hour chart. Euro dollar basically gapped higher off of the European elections. So let's talk about the European elections a minute. Why in the world did euro dollar gap higher after the European elections? Because it is clear that the far right gains quite a bit of support, and all the articles you read will say that the far right here it says French. The far-right national rally wins the first round of the snap elections, and there is another round this coming weekend. And so why in the world is the euro trading higher if the far-right won the first round of the elections? Because they did not win a majority. If we go back to this article, it says that they won 34%, which is why they won. Whereas the leftist the New Popular Front won 30%, and Macron's centrist party earned 20%. So it's clear that the far right won, but there's no majority, and so it's basically a split government. And they're going to have another round on July 2nd. That's the one to watch because as this person who researches the vote says, first round victories tend to say little about the overall results. That is why beyond the overall percentage of votes, the main issue to watch on Sunday night is how many candidates from each party will make it to the second round. So investors are relieved that the vote wasn't 50% or 40%, for example. Gaps like to be filled. If you're a trader, you know that gaps like to be filled. And so there's a good possibility that euro could roll over and fill that gap. And if you look at the daily chart and we bring back those moving averages, you'll see we're still holding below all of the major moving averages. And until we get back above this point here, which is basically 107.80 or so, the downtrend still remains intact. We had German inflation data today. The German inflation data was weaker. It was weaker than the previous month, but it still showed inflationary pressures increasing. So the German inflation data is weaker. This week, the main focus is the Eurozone inflation data and the Eurozone retail sales report. And the Eurozone inflation data will probably show prices easing as well. So overall, I'm still bearish euros. I'm still bearish pounds. We have the July 4th election in the UK, and I think that the far right win in France is going to equate to probably some trouble for Sunak at the elections on July 4th as well. So I'm still bearish euros. And there's nothing much going on from the UK aside from the elections and the PMI revisions. I'm bullish Aussie. We have RBA minutes tonight. This is also a big week for Aussie. We have PMIs. We have the RBA minutes. We have retail sales. We have the trade data. And RBA is one of the least dovish central banks. They're not expected to cut interest rates this year. And I think the RBA minutes is going to reinforce that view, reinforce the fact that they're probably not going to cut interest rates. We have a lot of Canadian data this week. We have Canadian jobs data, Canadian IV PMI, we have the Canadian trade data. All of that is going to be quite important. And I think that, the Bank of Canada, they are still expected to cut interest rates again. And I think that we're going to start to see some more additional weakness because the last jobs data was really strong. It's going to be very, very hard to match that data. And so I think the CAD data should end up being a little weaker as well. New Zealand, we don't have anything going on for Kiwis, just going to trade on the market's appetite for US dollars as well as risk appetite in general. On bearish Swiss francs, we had weaker Swiss retail sales data and PMI numbers this morning, which is why the Swiss franc is one of the weakest performing currencies. And I think that's going to continue to remain the case as the SNB was the only central bank to cut interest rates twice so far in this cycle. And then I'm neutral, the yen. The yen is clearly in the downtrend, and until we get some reason for either the dollar to tip lower or the yen or there's intervention, it's probably going to continue to remain in a downtrend. So now let's take a look at the charts. So we looked at the euro dollar. I talked about how it's still, euro dollar is still in a downtrend right now until we break above 107. I would just round it out to 108, and we close above 108. If we rise back above 108, we can have a stronger move to 109. Actually, I skipped a step. Let's look at the calendar. The data that we had yesterday, the Tankan survey was mixed. And that's another reason why the yen is weak, because large manufacturing sentiment definitely improved, but non-manufacturing sentiment deteriorated. And we did not have an improvement in small manufacturers index. So that means that there's still quite a bit of weakness in the Japanese economy in general. And then the PMIs was revised lower, which is obviously bad news. And then we had the Caixin manufacturing index from China, which was higher, and that helped Aussie and Kiwi, while dwelling prices and inflation gauge pretty much remained the same. And then this morning, the reason why the Swiss franc is doing so poorly is because Swiss retail sales came in 0.4% against 2.5% expected. So on an annualized basis, the market was looking for a really good number, but it came in really, really weak. And then the PMI also dropped from 46.4 to 43.9, definitely seeing a renewed turn lower in Swiss data. Sterling, on the other hand, is doing well because house prices are up, and then also mortgage approvals are up. So we're seeing some stabilization in the housing market. And then we had inflation data from Germany, which is kind of a leading indicator for the Eurozone inflation data. And that came in weaker, which means that the Eurozone inflation numbers will show inflationary pressures moving in the right directions towards the central bank's target. Today, we have ISM manufacturing data. This is quite important. We've been below 50 for, this would be, if it, and it probably, there's very little chance it's going to be above 50. If this comes in below 50, it'll be third month in a row that the PMIs are above 50. And pretty much there was only 1 month that was above 50 for the past year, just highlighting the weakness in the manufacturing sector. But as you can see, the market's looking for an uptick. If we get an uptick, that'll help the dollar and help yields. If we get a downtick, that would be a problem. Unfortunately, the Empire State and Philly Fed were lower, so the chance of a uptick, I think, is lower. And then we have the ECB forum on central banking, beginning with the RBA minutes tonight. Tomorrow, we have more ECB speak with the Eurozone inflation data. That's going to be important. You can see that the market's looking for Eurozone inflationary numbers to come in softer, 2.8 against 2.9 expected. And then we have ECB President Lagarde and Fed Chair Powell speaking at 9:30. Boris, this is right during Boris's live trading time. So there's going to be a lot of action. Join him for live trading tomorrow, which begins at 9:15. So there's a lot of action happening right when he tunes in. And then we have Australian PMI revisions, not a huge market mover. Retail sales from Australia is coming out. That's going to be stronger. Australia's lowered taxes. They're introducing fiscal stimulus. That should provide a nice little boost for the Australian economy. That's going to be different from what everyone else has and keep Aussie supported, in my opinion. We also have Chinese PMIs coming out. And then on Wednesday, we have Eurozone PMI revisions, not a huge market mover. We have ADP and Challenger from the US, which are leading indicators for NFP. We have Canadian trade, US trade, and then most important event on Wednesday is going to be ISM services, because ISM services is truly the most important leading indicator for non-farm payrolls. And the most important thing we'll be watching is how the employment component of ISM services fares. And then with the Fed minutes, and as I said earlier, the dot plot showed only one rate cut in 2024. So will the Fed minutes reiterate that? I'm a little dubious. I think the Fed minutes are going to be more bearish than bullish, but we'll see. And then we have the Australian trade data. Thursday is a holiday in the US. We still have Swiss inflation data. We have the UK elections, huge event there. So keep an eye out for that. And then Friday, we have Eurozone retail sales numbers, German industrial production numbers, and then Canadian and US jobs numbers. And with Canadian jobs numbers, definitely watch the employment change and the full-time employment jobs numbers, non-farm payrolls. As you can see, markets looking for the first a big drop, not a pretty sizable drop from 272 to 195. So if we come in below 195, it could be quite bearish for the US dollar. So a lot of events, a lot going on. And going back to the charts, we talked about the euro already. Dollar yen, stratosphere now. Resistance, the charts that I have here are not going to go that far back, but 165, 168 are the next resistance levels for dollar yen. Pound dollar, we're just in the range trading zone. Looks like it wants to perk up a little bit, holding above the 200 SMA. I think it could move up to 127.50, especially if we get some weaker US data. Dollar Swiss popped up after the weaker Swiss data that we had this morning. It is actually hands down the strongest major currency this morning, and Swiss franc is the weakest. There's some resistance at 90.50, which is right around where these peak highs are, so keep an eye out for that, but it looks like the uptrend remains intact. Aussie also above all the major moving averages, still remains in the uptrend. 67.20 or so is major resistance in the Aussie dollar, and that's what I'm watching. Kiwi dollar, Kiwi is holding support at 60.50. It's there's, like I said earlier, there's no major Kiwi data this week. It's just going to move in the market's appetite for US dollar as well as stocks. Last but certainly not least, dollar CAD. We have a lot of CAD data this week, most of which is probably going to be softer. So there's, dollar CAD, this is an interesting candle. If we close above yesterday's or Friday's high, then there's a good chance we could continue to move higher. I am bearish CAD this week. I think that dollar CAD could potentially squeeze to up to 137.50. But of course, CAD is also sensitive to US data, and US data we're a little bearish on. So we'll have to see, but CAD definitely looks more of a sell against the crosses than the other major currencies. All right, so now I would like to open up the floor. Any questions for me before I turn it over to Boris, who will be live trading with you all on non-farm payrolls on Friday. Definitely tune in to that. There's a lot going on there, and Apex's 80% off sale continues. It's ending in I think July 9th is when it's ending. So definitely take advantage of that. And if you want to learn more on how to use fundamentals to trade forex, definitely check out my link for learning how to use learning more about fundamentals, because clearly you guys are all understanding the importance of fundamentals, and it is truly important, especially this month where we have so much event risk. And if you're joining us at the tail end of this, you've got to watch the beginning, because with the Olympics, new governments, the UK, France, BOJ, stocks performing well, China Plenum, no shortage of things to move the markets this week and this month. So now I'll turn it over to Boris. I don't see any questions for me. I think I covered everything that everyone's watching, Boris. So I'll turn it over to you.
Okay, super. I'm going to grab the screen, make me a presenter, and I want to share, make sure I got the right screen. 3. Okay, cool. So I actually, I put in the link to Apex, which is still doing an 80% discount. And I wanted to start off today, not with the macro. We'll talk a little bit about macro in a second, but just to kind of get you into the flow. This is last month's performance of me trading Apex. And you can see that, we're basically at a 70-30 win rate, which is good, but I think I can do better. And I've actually spent the last week and the last weekend really, really improving all of the tools that we use for trading in our room. I think going to be taking this month to maybe another level, to take it to 75-25 in terms of accuracy. One of the things that I kind of wanted to share with you was everybody who trades with me, and I put the link in live. We're going to do live trading tomorrow. We're going to do live trading on Wednesday, and we're going to do live trading on non-farm payrolls. So we'll be using all of these tools. And if you want to get access to these tools, let me just put in a link here for how to get to my coaching. I'm putting in the link over here to get to my Past the Prop Academy. This will give you access to all the tools that everybody in BK is trading with me to get the results that I just showed you. So go ahead, click that link, sign up. You're going to get 3 months of very, very intense, really, really great trading and coaching with me every single week. The coaching night is actually tomorrow night. So if you join today, you're going to get right into coaching tomorrow, which will be excellent. But what I wanted to kind of sort of explain to you is, we scalp continuously, and we do a really good job of scalping. And I've constantly improved our scalping tool, but I think I've actually improved it to an even better degree, which I'm going to put to practice tomorrow when I live trade with you. But the idea that we always like to do here is want to scalp with trend. And as you can see, the sub labels show you the momentum trend. The blue arrows show you the retrace entries. And sort of our initial idea was to trade momentum. Then it was to, let's trade retrace, because retrace is kind of a better entry. And I finally, I think, cracked the code to how to do this perfectly, which is first we get the momentum trade, which is the sell labels. Then we get the retrace arrows. And then we follow on the next momentum candle. So this is a perfect classic example I wanted to show you in gold that I did today. Here's gold in a sell mode. We get the momentum trades sell for momentum level, retrace level over here in blue, and the next red candle just basically a flush down here. You could have even taken the trade to the next level here in the sell 8 level, where you have a momentum retrace, and this red candle over here would have given you a nice clean move to the downside. You see this also of course, in S&P. You see this in NASDAQ. We see, we don't have much going on right now because we don't have the trend, but earlier in the day today, we had this perfect trend, retrace arrows over here. The next green candle over here was a beautiful trade to the upside in NASDAQ. Similar idea here in, let's see, the Dow. Yeah, here's Dow, perfect. So Dow, momentum move over here, retrace label over here, getting long over here would have been a clean, nice move over here into the trade. Similarly, by the way, here's the sell side. We have a momentum sell label over here, a retrace telling us prepare, and this candle over here, let me just mark it for you guys so you can actually see it right over here. Just a perfect entry on the Dow or the US 30, flush right down to the downside. It really makes it cool. So that's one thing I did for you guys. Another thing that I did over this weekend, which is going to blow your mind, is the whole one shot, one kill trade. But this is a single trade for either 25 or 50 points amongst the German, the gold, the US 30 or NASDAQ. US 30 and NASDAQ haven't occurred today yet, but look at how great this particular setup has done. And I fine-tuned it really hard. There's a lot of new twists in this whole thing. And I'm going to talk to you tomorrow live about it. But if you guys, again, if you want to join me in Past the Prop coaching, you're going to get access to these trade signals every single day. So here's the German coming in here. You get the buy signal over here. I had to, it's really fascinating, and I want to get into the details of this, but it's absolutely the opposite of everything that you think you should be doing. This is why this particular approach really works well, because it's a sort of a completely contrarian approach, and it tends to really provide excellent entry trend signals. Today, for example, 25 points in the German. And if we go into the gold already, let me just set it up to gold. If I go into the gold structure, you'll see that in the gold, $500 in gold. Literally, I think it was like 5-10 minutes. I was shocked at how fast these signals were. And these are great, one signal per day in gold, US 30, German, NASDAQ, the four key indices. So if you can imagine, if we're going for basically $500 a day in each one of these instruments, that's potentially $2,000 a day in signals that we could be harvesting on a good day. So all of this, I encourage you guys to come join me at Past the Prop if you want to get the access to all these indicators and all these strategies. And of course, come join trading with me live tomorrow. Now, as far as macro, I'm just going to do a very short summary. Kate did a really good job on the summary, but I'll say my one final thought about macro this week is listening to a lot of very interesting, intelligent guys who I really respect in macro. Many people are beginning to think that the Fed is actually starting to make a policy error. And let me explain to you why. Because although the economy seems like it's doing very well, the underlying tone of the economy is that we're actually 60 basis points, 0.6 of 1%, higher in unemployment than we were at our lowest unemployment. the quits rate, which is the rate of how confident workers are feeling, is actually lower than it was pre-pandemic. That means workers are feeling less secure about their jobs than they were before the pandemic. Remember, after the pandemic, everybody was really, really arrogant because companies really needed workers. So, and labor costs have really been muted. So this non-farm payroll is going to be a very interesting tell. It may be the first tell to us that the job market is drying up, that income growth is kind of slowing down. The Fed is going to have to start cutting sooner rather than later. So we're going to keep all those factors this week on our plate. And in the meantime, we're going to scalp away and hopefully make all the money we can. Please join us here in Pass the Prop. Please join me live tomorrow and Wednesday, and of course, non-farm payrolls. And be sure to get the Apex accounts because they're still 80% off. They're still dirt cheap. I'll see everybody in BK in about 10 minutes. Otherwise, everybody have a wonderful, wonderful day. I'll see you guys in the markets tomorrow.